Hey everybody, Brian from Bear Bull Traders here. It is the weekend, February 20th. It is a long weekend. We've got Monday off due to President's Day. Markets will be closed. But let's do the weekend video thing where we'll look at what happened last week in the markets. And then we'll take a look ahead and see what we've got coming down the pipe in the coming shortened trading week. So let's start out and look at what happened last week and some of the things that were weighing on the market that caused it to drop again. We had, of course, continuing concerns about inflation and the Fed response to that, to those in that inflation that just keeps showing no sign of tapering off. And then, of course, we had the Russia-Ukraine situation that is weighing on the markets. So those two things certainly were combining to take the markets lower. And speaking of the markets going lower, you can see here we were off on all the indexes. Interestingly, the IWM small caps were the best performer in the lot. And again, this is a repeat of last week where the IWM actually went up while some of these indexes were down. So IWM kind of hanging in there. Small caps. Areas of strength and weakness that we saw last week, basic materials, certainly gold, silver was catching a bid. Defensives were strong, probably based on a lot of the concerns, money rotating into defensives. The energy sector really pulled back last week after having a pretty significant run over the last month or two. And communication services continue to be weak, and a lot of that is contributed by Facebook, which was continuing to show weakness through the entire week. The 10-year Treasury note still really showing no change from last week, up and down a little bit, but ended up pretty much flat on the week. And the US dollar, sort of same story. And this is the part of the show where I do a quick ad for my book on Amazon, How to Swing Trade. If you have not checked it out yet, it's there. Rules, Routines, Strategies of a Swing Trader that I use to make trades. So let's start looking at some charts here. And this is the 2-year Treasury note. I like to start out with the Treasuries because the bonds and Treasuries are the bigger market, often the tail that wags the dog, as they say. And you can see here we've had this nice run up on the 2-year Treasury note. I've been through that a number of times, and a little bit of a pullback here on the weekly after this nice big run up. But we still are in an uptrend on the yields, and I suspect we are going to continue to climb as the Fed gets more hawkish and continues to look at tightening rates to what they consider to be a more normal level and try to get a handle on some of the inflation that seems to be running a little bit out of control right now. You can see here again, basically finished flat on the week with a 10-year. Bit of a pause. We did get up over 2% again at one point. We are kind of backing and filling in this area here, but as I said, I believe we are going higher. The transports, again, not a great day Friday, kind of an indecision day. Overall on the week, we were just down a fraction, but again, we're just struggling to get above this 50 moving average, which we've dropped below here. So, pretty critical area of support here, and this level of sort of 16,000 probably resistance, but I really think we're going to struggle to make any gains this week in the markets. You can see here right now, we did this pop back up after this big sell-off on the Dow, and you're going to see this in a lot of the charts. We popped up, tried to get back up to recapture. We got into an area of significant sort of resistance here, pulled back, tried to go higher, and we couldn't. And then you can see on this pullback here, we came right back up, came to the 200-day moving average, which was where this pullback happened as well, because coincidentally, and rejected from there. So this was making what's called a lower high, which is, here's your high, here's your push to try to get back up there, and of course it failed. So it made a lower high. So we're right back down into an area of pretty significant support. If you go back and look at your time sphere, the end of the year, and then this pullback, we tried to hold here, or we did hold here for a time being after throwing a lot of wicks there on volume. But again, this is not looking overly positive for the bulls. I would say volume picked up a little bit on Friday on the sell side. Again, You can kind of see here. Here's your double top. We did try to make a higher. Tried to come back, made a lower high again, and you can see here we're right at sort of critical area of support, which I mentioned in my opening statements here. So I think we're going lower. Um, I think that there's a lot of concern in the market about interest rates. I believe we're going lower. So, I won't make the same comments about the Q, but you can see here sell off, pull, pop up, pull back, and here's your area of support, which now becomes resistance here. And again, we start to head lower, and we are right testing some area of support, which I think we are going to break. Qs again on the weekly not looking very positive. A significant area of resistance here, which is becoming support. We came to support here, and now we're back at it again. And we could easily drop some more here. I can see that happening on continued, unless something gets resolved in the Russia-Ukraine situation, then we will see a pop in the indexes. The SPY is really just the same comment. You can see it. It's just basically the same chart. Again, at an area of pretty important support. And the only thing you can say that's sort of positive here is the IWM. The IWM, we've got a double top here. We made a higher high here, and a double top, which was the bulls weren't able to push it to continue to push it higher, but we had a higher low on this pullback, and now we're back testing this low again. So again, I don't think this is even though this looks, probably the best chart of the bunch, I still don't see this as being a very positive looking chart. And you can see your volume picked up a little bit on the Friday to the downside. And you can see all your momentum indicators, the MACD, the stochastics, they're all kind of rolling over here, RSI. So again, bias is definitely to the downside, even on the IWM. The VIX was off on the daily on Friday. Typically, you do get a drop in the VIX going into a weekend, particularly a long weekend, and so the VIX came off a little bit. But again, this is making a series of higher lows, and I suspect if the markets do sell off more, obviously we're going to go back up and test this 32 level on the VIX. The dollar, again, I mentioned here, it was up on Friday, but it really finished out the week flat. So we're just kind of chopping in this range right now. And Bitcoin, again, the sort of this, tried to get through this 45,000 level, double top here, and really started to lose it again. So we are coming back down to retest this, I'm going to say 37,000 level. Hopefully it can, if you're long, hopefully it can hold there. But again, sort of risk off. So Bitcoin isn't a good place to be in a risk off scenario. All you can see is maybe this pullback to this trend line, which quite often happens after a breakout. Maybe that holds there, and maybe we do get a continuation move up. So let's go through some stocks I'm watching for the coming week. We'll start out with gold. As I mentioned, I've been in gold for a while now. You can see we've had this beautiful run. This is probably mostly related to the geopolitical concerns that are going on right now. And you can see we've had like an amazing run up here and getting a toppy around 1900. But did take a little bit of profit there. But you just be careful with this, because I think if there's any sort of resolution with the Ukraine-Russian situation, this probably will drop back pretty hard. So just be cognizant of that. I think in this situation, or in this current environment, we've got to be sort of building a shopping list. If you're interested in certain stocks and you want to own them, or you want to add to your positions, I think this is a good time to be in cash and wait patiently. But certainly if we can get a pullback to Apple on 160, I think that would be a very good entry position for Apple if you don't have it already. Again, solid company, solid earnings. Just look for companies that have revenue and a decent price to earnings. Amazon's another one that you could probably watch. I mean, certainly if we get a pullback below 3,000 into the 2,800 level. That could be a good level to add or build an Amazon position on. Again, this is the way I'm playing gold GDX, GDXJ. That's the miners, this junior miners. The J, the GDX is the senior miners, but you can see here it's had a nice correlated run up with the price of gold. And LABU. LABU has really been beaten up. This is the biotech ETF, but it's maybe putting in a bit of a double bottom here. Really down quite a bit from November last year where it was 66. Now it's 16. It's about a quarter of where it was, but I think there might be some value there as long as it holds this 15 level. And again, a way to play silver with the Pan American Silver Corp. It's a pretty direct play on silver. It's had a nice run as well. PayPal's one that just has gotten annihilated. So we had this earnings report here and just no love ever since. And I think you almost have to go to a weekly to figure out maybe where the bottom is on it. But maybe back around just under 100 it might bounce. So I'd be watching PayPal, see if it hits 100 tomorrow. It'll probably bounce from there. But it's getting really, really oversold here and overdue for a bit of a bounce there, I think, on PayPal. Silver, again, this is just how silver has looked since sort of the poor man's gold. Also a play on the EV space, electronic space, because a lot of silver is used in semiconductors or electronics and fuels and cells, I believe. Not fuel cells, but batteries. So here's the SOXL. This is the semiconductor index. Again, really beaten up here. You could see that in NVIDIA and AMD, the way they were trading on Friday. Just horrible price action. You can see the selling here. They're picked up here on Thursday and Friday. And just no love in the semiconductor space, which is a little bit strange since what I've been hearing is semiconductor shortages are going to continue into 2023 and not abate later in the year as people had initially thought. But I guess that was maybe not good for the semiconductors, but it certainly is good for pricing. When there's too much stuff, the semiconductor or the chips typically fall quite a bit. Here's another one like PayPal and Square, another one that's really that's lost support here at 100 on Friday. Fairly big volume on that drop. We do have Square reporting on Thursday, so a stock to definitely keep an eye on there if you wanted to play that with options going into the earnings. I'm sure the options prices will be elevated, but again, just looking terribly. Let's quick look at the weekly. Try to see if we can find where there might be some support here. Maybe back down in this area, 85. So. Something, again, Square, just be aware their earnings are coming up this week. Tesla, again, sort of bouncing along here, just can't get back over sort of 950 area, looks like resistance. This 200-day moving average has always comes into play, so watch Tesla there. The oil, we did get a bit of a pullback. As I said, energy last week suffered a pretty significant pullback. You can see here we had that big drop. After this massive run up. So, I was mentioning this around here that this was really extended from all the moving averages and really had to do some kind of a pullback into an area where we consolidate before we move higher. So got that pullback and seems to be holding that area. So again, Wesco just kind of keeping an eye on that. If it drops down in this 118 area, I'll maybe pick some back up again. And the financials. Financials should do well in a rising interest rate environment. Right now, we had a bit of a pullback, so the financials pulled back, but again, an area to watch in this right where we are now. And shipping companies are certainly making hay while the sun shines here with the high shipping prices, but this one seems to be topping out. So that's it. Okay, so let's wrap things up. You can see here we're at pretty much support on a lot of these indexes right now, 34,000 on the Dow, and we're there now. And same with the Qs, 340, and we're pretty close to being there right now. Same with the SPY, same story. IWM continues to just be a little bit more um, positive, I guess, if you want to call it that. And 205, same resistance as last week, and support 195. But we seem to be kind of staying above those, above and below those levels. So IWM still looking the best in a bad lot. What's going to happen next week in terms of economic events? I don't really have anything that I really flag. The usual sort of jobless claims numbers Thursdays, that kind of stuff. But the Russia-Ukraine situation is going to probably continue to weigh in the markets, along as well as what the Fed's plans are for the March meeting and interest rate hikes. So concerns will continue in that area. Earnings next week, we do have what people are calling the retail week. So we've got Monday, obviously the holiday, nothing going on then. Tuesday, we've got Macy's and Home Depot. After the market closes, we've got TDoc, Teledoc, and Rig Oil Company. And then on Wednesday, back to the retailers, Lowe's, TJX, and then we've got eBay and Jack in the Box, a few of those, but more of those are kind of the notable ones. So that's it, everybody. Hope you have a great long weekend. And of course, we'll be in the room live on YouTube Tuesday morning, 8 o'clock, starting out our pre-market show. And then members can be with us when we start trading the market open at 9:30 in our trading room. Take care, everyone. Have a good one. And we'll talk to y'all later. Bye for now.